Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of us is financial advice. Just me having fun looking at charts like the chart behind me, which is of Nikola, ticker symbol NKLA. And here we are looking at the daily candles because I wanted to point out one big thing that they have earnings coming up on February 22nd, and I will be streaming that. So that should begin at 10:30 Eastern, and I will be starting the stream about 15 minutes before. So make sure you check that out if you'd like to join, whether you can tune in live or, after the fact. It will be on the channel. But then here, looking at the chart, first I'm going to go over the weekly candles just so we can get an idea of, the longer term trends that we've been seeing with the chart. And so here we can see that over the past few weeks, Nikola has been consolidating pretty nicely above right around 71 cents, 71.50. So it has been holding that level pretty well with some nice dip buying opportunities. And so looking at the close on Friday, February 16th, at a price of 73.99 cents, unfortunately being down about 1.33% on the day. But over the course of the week, relative to the past 5 weeks, we did put in a higher close. So I do think that is really good. But what I think would be really nice is if we could put in a close above the high of that week, which was 79.88 cents. So this level right around here. But just thinking about round number, it would be great if we could put in a close for a weekly candle above 80 cents. That would be ideal. But if we do get a wick to that level or above it, I do think that could be nice. But if we do close below, that would suggest that sellers are exiting above there and we're not able to maintain the momentum, maintain the strength. So I do think a close above 80 cents would be really key for the stock for a weekly close. But here now looking on the daily chart, I do just want to go over the 5 candles from the past trading week. And so what we can see here is that on Monday, February 12th, we did put in a pretty strong day, going up about 2.33% on the day, closing higher than any of the highs from the previous week. So I do think that is really good, but we were not able to get above this level here, hitting a high on the day of 75.39 cents. And as you can see, we did have a red candle the following day going down more than 7%. And so that does suggest that this was kind of a fake out. We did not get confirmation above these highs, getting 2 closes above them. And as a result, we did get this drop to the downside, but we were able to consolidate and reclaim that level, actually putting in a higher close on Thursday than what we saw on February 2nd. So that's pretty nice. And it does look like we also put in a higher close than really all of these candles here. So that's the highest daily close for really like the past 2 weeks. So this candle here, January 29th, with a higher close. And then also, the red day on Friday, not so great. But it is nice that we were able to hold price in the upper half of the previous day's trading. So I do think that is good. And also, the close on Friday at 73.99 was higher than the close here. And actually, this has been the second highest close, second to this one here, the second highest close since this one of January 31st. So this is actually the second highest close of the month. So I do think that's really good. And so what I could see happening with this before earnings is that we could see a bull flag forming and then a potential break to the upside. But in order to guide us with that, I'm just going to throw up some levels. I have gone over all of these before. And so one that does stand out to me is this dashed trend line that has acted as support really just over the past 2 trading days because we did break below it a couple weeks ago. And then last week we did break below after that Green Monday. But we were able to reclaim it on Thursday and hold above it Friday. However, we were not able to hold above these two levels here, one of those being the high from January 26th at a price of 74.50. So we do want to reclaim that, get two consecutive closes above it, or even better, would be 74.78, which is the 236 level from this Fibonacci retracement here. So if we can get two closes above that level before earnings, I do think that could suggest that we might be taking out this high here of 79.88, really ideally getting to 80 cents. If we do dip lower before earnings, I do think a key level to pay attention to is the 382 at a price of 71.62 cents. Or, you could think of it as 71.5 cents, something like that. If we do get price dipping to that level, but then closing above, that could suggest strength before earnings. But if we start to see closes below 71.50, and really if we start to test 70.5, I do think that could suggest downside following earnings. But if we are able to hold current price, or definitely above this uptrend, holding above 71.62 as far as closes go, I do think that could suggest that we might be testing 80 cents following earnings, but earnings are always so hard to predict, so tough to know, but I definitely will be streaming that, so make sure you tune in for it. And if you found this helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.